I'm with Avalon Actuarial, and we're an actuarial firm, and we consult in different areas, traditional areas like employee benefit plans, but also in a lot of niche insurance markets. And certainly pet insurance qualifies as a niche insurance market. We are based in Canada, and we do a lot of different competitive market surveys for the different insurance segments, and cross-border as well. So we're going to start today with looking at the methodology around this survey and how we compile the information. And then we'll get right into the results. We'll talk about the gross written premium. We'll do that. We'll separate it out by product, and we'll also look at the new business that was added in 2012. Then we'll look at the number of policies and the number of pets, and we do that separately because there are some companies that have a method of doing one policy equals one pet, and others that do one policy equals multiple pets. And then the average premiums we'll take a look at. And then lastly, we recently just sent you something on future outlook and sort of getting some opinions from you in terms of where the industry is going and what your main concerns are. So we've included some results from that as well. We'll do that as part of the survey next year, not a last minute thing. And we'll probably expand on that because I think it was kind of interesting, and certainly there doesn't seem to be consensus on all points. So I think that that's really important for us to take a look at and to track going forward. So looking at methodology, the objectives of the survey really is to provide you with a thorough understanding of the North American pet health insurance industry. This includes a variety of key metrics. We talked about total premium volume, total number of policies, and pets covered. These are good points to be able to speak to for the industry. We want to, I think, ultimately position this industry as a very credible and viable industry. It's a growing industry, and it should take its position in the insurance market. And I think to be able to do so, this is the foundation for that. We also look to this survey to build on year after year so that we can monitor the performance and the growth of the industry. And it's fun being in a growth industry like yourselves, and as we'll see, there's a lot of opportunity. So it's exciting times. You know, I do this for other insurance segments, and I can tell you we don't see double-digit growth, and we don't see the type of exciting things going on with your industry and a lot of the initiatives that are taking place. And lastly, it creates a benchmarking tool for each of the participants. Speaking of the participants, we have, as Laura mentioned, now all the Naphia members, including VPI, as part of the participating companies. We were really, really pleased this year with the participation and everybody really being committed to this and getting us all the information. I know my colleague Pascal called a lot of you up many times, and there's a lot that goes into this. So I do appreciate all the time and the efforts that were put in by everyone to get this going. We suspect that next year this will grow a little bit too, because we have a few new companies in the mix, and I believe RSA is in the mix, and potentially another company, Healthy Paws. There's new players, so we are welcoming everyone to participate in this survey. The more information we have, the better the survey, the better it is for the industry. In terms of the products that we monitored, we divided them this year into 4 segments. We have accident only, which, as you know, it can be lacerations, motor vehicle accidents, poisoning, etc. Accident and illness, which is by far the biggest segment of the market, and that's all the accident causes plus cancer and digestive problems, and etc. Insurance with embedded wellness. These are, again, added to that, could include vaccinations, early screening diagnostics, nutrition, dental, etc. And then last thing are the endorsements, and these are riders for wellness or cancer. And you'll see some of the shifting in numbers, and this typically happens the first couple of times that we do a survey for the first time. You know, people have to restate things and recategorize things, and I think that after the first two, we're at a spot now that's really good. You'll see some of the numbers have changed versus the previous survey for the same time period. So I caution you to make that comparison, just because some companies had to recategorize and shift some information. Not to mention the fact that we did break out the endorsements for the total premium volume, which we hadn't done in the past. Trial policies are still not included. We are still going to gather that information, but we don't have quite enough information or enough companies in that space to be able to properly put up the data there. So as companies report more on this, we'll be able to get to that level, but we're not there yet. And if we were to include them in some of this data, it gets skewed. Some of the results would get skewed because you don't have the premium, but you have the policies. And then, you know, we're looking at aggregate results. The in-force data is based on end-of-year results as at December 31st. And when we look at the new business that was added or the new pets that were added, that's based on the sum of 4 quarters over the year. As I mentioned before, the number of policies, we had 6 members that had 1 policy equals 1 pet, and 2 that have 1 policy equals multiple pets. We'll see the ratio that gives later on in the presentation. Just to mention also, the reason why my colleague made a lot of phone calls too is that we do go back and look at previous surveys and how they were compiled, and if the data is consistent, and if it isn't, then we come back to you. The data is reviewed in a lot of detail. There's a lot of reasonableness tests that were conducted, and we want to get to a point where we're very comfortable with each of these categories. Moving on to the gross written premium. I know here, you know, as I mentioned, there's going to be a lot of figures that we're going to be talking about, so I hope a little humor interjected from time to time will help. We're not talking about life insurance, obviously, but the fact that cats have 9 lives, you know, there could be some link to them surviving those nine lives and costs associated with it. So I know we also were talking about employee benefit plans. So at one point, you know, these are all pieces of the puzzle that are coming together, I think, for the industry. Gross written premium. So great news. In 2012, we're at about $425 million. And that was up 13.3% from 2011, when we were at 375. As you can see, year over year, we're looking at double-digit increases. And really, as I mentioned before, that's not something that we see in other insurance segments. It's very exciting. You can see that the economic downturn didn't really have a noticeable effect on your overall premium. You know, some insurance segments tend to actually do well during the economic downturn because people want to protect either their investments or protect. But, you know, pet insurance, it's still a, you know, we don't have a lot of awareness on that product, so the fact that you can still see growth during that time, I think, is really good. The overall increase in the last 5 years is just over 60%, and your average annual increase is around 13%, which is quite high. We've estimated, so this is for the Naphia members participating in the survey. If we extend that to the entire industry, we're estimating that the entire industry is between 475 and 500 million. So you're closing in on the $500 million. I think realistically it's probably right in the middle of that range, but you're closing in on the $500 million, which is great. And you know, compared to just in a short amount of time where we started a few years ago, that's quite the increase. Now, if we split out cats and dogs, the cats are the smaller segment by far. There's been a consistent, it's been about 89% of in-force gross written premium for dogs every year. So every year it stays around that 88, 89% range. You can see that the dogs have a slightly higher increase year over year. You know, the increase in premiums for dogs is slightly more than for cats. Probably to be expected. There's a little bit of a higher frequency of claims for dogs. There's some other contributing factors as well, but fairly consistent. And I should say the reminder that the survey now is only cats and dogs. We're not covering exotic animals or anything like that. If we split it out per product, and this year, as I mentioned, it's new because we decided to split out the endorsements. We've got accident and illness at $325 million, which represents just over 3/4 of the total market. The insurance with embedded wellness is about $24 million, so about 5.6%. The endorsements are $72 million, about 17%, and accident only is around the 1% at $3.65 million. You can see that you know, at 3/4 of the market, the accident and illness is really where everybody's focused. And if you look at prior versions of this survey, this is where I'm going to caution you, because we had some companies that had to recategorize some of the numbers that they had before. And as we'll see with the insurance with embedded wellness, you'll see that's gone down a lot. There's also in 2012, I think one of the main factors there is that there was a large company that was in that space that is no longer offering that product. So that contributed to the lower number there. This gives you an idea of the 4 products and their trend over the last 5 years. You can see that the accident and illness is trending upwards considerably. It has gained about 12 percentage points on the market share between 2008 and 2012. And the rest is kind of stable or declining. You can see the insurance with embedded wellness has come down quite a bit. The accident only has, you know, more than doubled since 2008, but it's a very, very small piece of the market, and it's still a small piece of the market. This is, gives you an idea as well, the per product breakdown for each of the years and how it's been trending. And you can see there's some red now in the last couple of years, and mainly on the insurance with embedded wellness. So it's really come down to 24 million, and it's probably going to continue to come down. The endorsements are going up slightly, so that's good. They've kind of rebounded from last year. But again, the accident and illness is the segment that's just growing tremendously and contributing to most of the growth of the entire segment of the industry. The entire industry. If we look at new business added, so this is just what you guys added in 2012 and for each of the other years. It's you can see that the increase has come down from year to year as to what you've been adding. And I think that's sort of a trend that you may want to take a bigger look at going forward, because that's not a trend that you guys want to see. There was a 1.8% increase from 2011 to 2012. We certainly don't want to see that getting into the red next year, but that's the new business that was added. And these figures, I should mention, are all included in the they're all in the in-force numbers. So when you look at the total in-force numbers for this year, it includes all the business that you added. Okay? So what we went through just now and what we'll go through in the future, when you see in-force, it includes the new business added. This is the new business added per product, and again, you know, you can see it follows similar trends to your in-force. The accident and illness is the only one that's really increasing. The rest seems to be on the decline, and some fairly significantly on the decline. And this is, again, just thinking of what you added in 2012 if you're looking at that last column. This is the ratio of new business added to the in-force. And as you can see, it's started at about 35% in 2008, and it's come down to about 27% in 2012. This shows you that your total overall premium volume is really generated by a lot of your pets aging and your rates going up, as opposed to you adding new pets to the mix. And so how long is that sustainable? That's the question. I think it shows you that the efforts really need to start being geared towards adding those new pets to the mix. Overall, this gives you an overall picture of what's been happening. So if we just look at the last column for 2012, where we started 2012 was at 375 million. The new business that was added was 117 million. And the in-force volume at the end of the year was 425 million. So the net premium loss was 67 million, which, highlights the importance of retention. I know that, as this survey evolves, retention strategies may be something that we want to discuss more or start tracking a little bit more. But it does go to show you that you're adding 117, but you're losing 67. So it's still a big chunk of what you're adding, and those efforts, that you're spending to add those new policies. You have to look at your retention and how you're doing on that end as well to see if it's really worth it. One of the things that I can mention is that on those cancellations, just to give you an idea, we monitored the top 5 cancellation reasons, and in order, the number 1 is financial, cost or non-payment. The number 2 reason is they weren't satisfied with the coverage or they went to a competitor. And the number 3 reason is the death of a pet. And number 4 is the pet left the household. And 5 was just other reasons combined. So it also shows you that what we'd like to do, I think, going forward, as well as a refinement to the survey, is we'd like to see what cancellations are controllable versus not controllable, right? The death of a pet is not controllable. But the other ones, if it's financial, if there's complaints, if they're not satisfied with the coverage, if they're going to competitor, these are all things that are technically controllable. So it'd be interesting to monitor, that a little bit more, and to give some feedback to people as to what's been going on the cancellation reasons, and then relate that back to the retention efforts. We're going to move on to the number of policies. Number of policies, steady growth. It's a little bit more than last year. From 2010 to 2011, we were at 6%. Now we're back up to 7.6%, so that's good. If you compare this to the gross written premium, if you recall, the average annual was about 13%. So there's a big difference there. 34% is the overall growth in the number of policies in the last 5 years, from 2008 to 2012. So 34% versus just over 60% for the gross premium. Now, here you'll notice, I'll bring to your attention that we don't have the 4 groupings here. We didn't include the endorsements because they relate back to a base policy, and so we didn't want to have duplicate numbers, and that's why we didn't include them in there. They're included in the pie, but not separated out, just because they're counted as one policy with the base policy. What I think we'll do next time, though, is we'll put a little footnote to let you know how many endorsements there are, just so that you don't double count them. If we look at the split, I mean, it's all accident and illness, basically. It comes, you know, it's over 94%. Insurance with embedded wellness, 2.8%, and accident only 2.8%. If you look at the trend, you can see the same trend with the accident and illness over the years, and certainly a higher spike in the last year. Insurance with embedded wellness, premiums are down, policies are down, and accident only, well, they're up. They're up. It's still a small segment, but they're up. So now we'll take a look at number of pets. I don't know who are dog people versus cat people here, but we'll take a look at the number of pets insured. I think this is, you know, always a good metric to have, because especially when people are talking about the industry, people want to know how many pets are, you know, covered, and so this is a really good thing to track. And we've got some good figures, I think, this year, that some good thresholds that we've just met. So if we look at the in-force pets, we're just over 900,000 this year, and that was a 7.2% increase over last year. And as as with the policies, and you'll see this follows almost the same trend as the policies exactly. I mean, the ratio of pets to policies is 1.03, so it's it'll follow the same patterns. We see the good news. Between 2010 and 2011, the increase was 6%, and now it's back up to 7.2%, so that's really good news. And I think that, you know, if we extrapolate, this is again just the Naphia members, so if we take that and estimate what the total market is in the pet insurance industry, we would be over the 1 million mark for the number of pets insured, which I think is a great number to be able to tout as an industry. And certainly, you know, when we started at 677, it didn't take that long to get up to that million mark. So hopefully we'll see the same growth patterns, if not better, going forward. If we look at the split cats versus dogs, similar to that of the gross overall premium, which was, if you recall, I said the dogs were about 88, 89%. In terms of the number of pets insured, it's very steady. It's around 84, 85% for dogs. You know, the penetration for cats is quite low, you know, at 15%, given the number of cats out there. I'm trying to remember the numbers, but I think the study from the American Pet Products Association estimates that there's about 165 million pets. And so if you've got 1 million that are covered, you've got a penetration rate overall of just under 1%. And there seems to be a lot of room for growth, which is, I think, the good news story. And certainly with the cat segment too. And you know, it's hard to explain. I'm not overly familiar with what it is, but you know, in talking to people, there may be some explanations around people don't feel the same way about cats. I'm not sure about cat owners, but perception that cats don't have hereditary conditions, perception that vet fees for cats cost less, maybe that the insurance was overpriced from the start. Is there a breed factor question in there? So there's all sorts of possible explanations, but at 15%, given that the number of cats in that 165 million is more than the number of dogs, it's quite interesting to see that the penetration is much lower. And again, similar to what we looked at with the number of policies, we just split it out and it follows the same trend. One of the interesting things that I just want to add to this slide was that the average age of in-force pets in 2012, this is the in-force pets, was just over 4 years. And the average age of new pets added was about 2.8. The same trend as we saw with the policy, so I won't spend much time on that. Actually, I'm just going to go back to this one. I had a range. That was the average age for in-force pets was 4, but the range was really from 2 till about 5.5. And then on the new pets added, the range was really between 1 and 3.6. This is the same, when we look at the average annual growth rate in the in-force pets, over the 5 years, it's 8.6%. That's the average annual growth rate for the number of pets. Here, new pets added. If you look at the actual number of new pets added, it's really stable every year. It seems to hover around almost the same amount every year. You can see that the increase year over year is not really increasing that much. We're still at 1.9%. It's better than the previous year where we saw a decline, but certainly this just goes to reinforce what we were discussing before in terms of what your efforts are around adding new pets and the sustainability of relying on rate increases and an aging population for your animals. This is the split, dogs and cats, and again, it's the same, very similar to what we already looked at in terms of the policies. One thing that I will bring to your attention is that, I was saying that the cats were a smaller percentage, but we did see a bigger increase in cats this year. So that was the largest increase that we saw, 3.6% from 2011 to 2012. And so, the tide may be changing, I'm not too sure, but that's very positive, I think, in terms of that result. The end state of the number of pets, and we'll take a look just at that last column, the 2012 column. The in-force pets at the beginning of the year, 845,000. New pets added during the year, about 257,000. In-force pets at the end of the year were 904, if you remember, thousand, and this is again the Naphia members. Net cancellations, though, close to 200,000. And the attrition, which the way we calculate attrition, if you look at the note, is we look at the net cancellations, and we divide that by the in-force at the beginning of the year plus the new pets that were added. And so that represents an attrition rate, a monthly attrition rate of about 1.5%. Which you could flip and say, that represents a 98.5% monthly retention rate. We'll just look at average premiums. Moving on. See, I don't know why the numbers don't get that kind of reaction. It's just the jokes. Average premiums. Okay, so what we did is, and we've sort of looked at this and grappled straight averages, weighted averages, what's the best way to present things. What we're looking at right now is these are straight averages for each of the product groups. We didn't want it, if there's, dominant companies that are in any of these spaces, that their pricing would dominate here. So we've presented this as the straight average, and when we look at it for 2012, this is per in-force pet, not per policy, per pet. Accident only is about $150. Accident and illness is just over $400, and insurance with embedded wellness is just over $1,000. And again, those numbers, you'll see the insurance with embedded wellness, that changed considerably from the last versions, and that was, again, the corrections that were made to the data and the revised data that was submitted. If we look at the increase, the accident only, the average premium increased about just under 5%. Accident illness increased just over 10%, and the average premium for embedded wellness by 24%. We tried to take a look at a couple other things here, and I was speaking to a few people that are very in touch with the vet community, and trying to figure out if the average premiums related back to vet fees going up and how much the vet fees were. And from what we, and this is anecdotal, but from what I gather is that in the past, prior to the last few years, the year-over-year increases were quite hefty with some of the vets, and we could see 7% increases year-over-year. A couple of years ago, maybe in the 5% range, And it would appear that right now, you're in the flat to 3% range in terms of vet fee increases. And so when you're looking at your average premium increase and your claims, it's interesting to factor that in. We also did a calculation just on a weighted average for the entire market for all products, and this was weighted to give you a good idea of what that is contributing to the overall increase in premium, which, if you recall, was 13.3%, and it is 5.6%. So the increase in total average premiums for the market for all products combined was 5.6, closing in 5.7%. Okay, and that's to compare to the 13.3% in total gross premium volume. This is the last slide was the average premium per pet, and this is per policy. So it's slightly different if you look at the numbers, but very similar, but just a little bit higher than the last slide. But it does show you the trend lines for those. Sorry. Okay, this is my favorite one, by the way. So, we just wanted to talk to you about the future outlook, about insurance and customer service issues, and so we went out with a little addendum to the survey at the last minute with some questions on your opinions on the industry and some of the responses we got. We got 6 out of 8 companies that were able to respond. Next year we'll have everyone responding. And all respondents agree with the statement that the current economic climate is good for pet insurance. That's great news. 5 out of 6 agree or strongly agree that we will see greater competition for pet insurance within the next 12 months, which is a short time frame. All respondents agree with the statement that consumers compare pet insurance options based on benefits and services. With regard to the statement consumers compare pet insurance options based on price, this was a sort of a mix. 1 company strongly agreed, 3 agreed, and 2 disagreed. So it was kind of all over the place, which I found very interesting. It's something normally that you see would be consistent in other markets. Normally people know whether consumers are comparing based on price or not and how price sensitive they are. 5 out of 6 respondents agree or strongly agree that online sales for pet insurance will outpace sales from offline channels within the next 3 years. Certainly if we compare it to other insurance markets, that would make a lot of sense. We have seen leaps in the last 2-3 years in some of the more mature insurance markets, so I would assume that this should follow the same trend. Drivers most likely to affect premium and business growth in the next year. So we talked about the increase in premium rates versus the growth in new pets insured, and you were kind of split on that. And then 1 company also mentioned the use of additional distribution channels as they're most likely to affect premium growth. Some of the main concerns in the industry for the next year, sales and growth by half the companies that responded, competition by 2 companies, and customer satisfaction by 1 company. So again, you're kind of split in terms of what you think the main concerns are for the industry there. I think, we'll see, but because of the opportunity that this industry has, and because of the untapped amount of, you look at your penetration rate, and certainly there's a lot of room for growth, competition is a good thing. The more awareness that you guys can build for your industry, the better it is for all of you. So if we just do a little recap on everything, the participating Naphia members combined for a total premium volume of about $425 million in 2012, and this was an increase of about 13.3% over the previous year. And the contributors to that, if you look at the number of policies, the growth in number of policies was 7.6%, and the growth in average premium, as I mentioned, was about 5.6 to 5.7%. So that's where we get most of that number. If we look on our estimate for the entire market, It's more in the 475 to 500 range, with probably the middle of that range about right. So closing in on the $500 million mark, which is very exciting. There was a total of approximately 877,000 policies in 2012, and that was up 7.6%. The annual growth rate is about 7.6% from 08 to 12. And there was a total of 904,000 pets that were insured, with the good news there being if we extrapolate to the entire industry, you're over 1 million pets insured, which is a great news story. Up by 7.2% from 2011. Approximately 85% of insured pets are dogs. And accident and illness was the top plan with 325 million out of the 425, and that represents about 3/4. And the average premiums we just went through, and again, the total overall weighted average there was 5.6%. So thank you very much.